Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. Before I begin part 2 about corporations, let me preface this video by saying that I am not an accountant, and if you need accounting advice, please talk to your own accountant. So about the corporations, there is so much information that I split it into 2 parts. This is part 2 of what it means to be incorporated. Please look for part 1 in the upper right hand corner. Congratulations, you are now the proud owner of a bright new shiny corporation, a standalone entity. There are some responsibilities that come along with it, however. You have to make some payments, either monthly, quarterly, maybe every 6 months. Firstly, there's the HST, which you are collecting from the client in your invoicing. Secondly, there's the corporate taxes, which are either monthly or quarterly, because your corporation does have to pay some corporate taxes, and the government wants you to prepay them. And the third item is the payroll. Now, this only applies if you are paying salary to yourself. And in case you don't know what the payroll withholding is, this is the tax withholding that your employer's payroll department is taking off your check right now. So all of this is so you don't owe a bunch of money at the end of the year to the government, because most people wouldn't have set aside the money to pay that, and also the government doesn't want to give you an interest-free loan. As far as annual fees, there is the annual corporate fee of $45 that I pay to Victoria. And there is the accountant costs, which can be anywhere from $1,000 to $2,000 per year, depending on your accountant, because the corporate tax return is far more work than a personal tax return. There is a balance sheet, there's an income statement, and there's a retained earnings statement, for example. You should have a binder with corporate documents, including the articles of incorporation. Now, into this binder, you need to put 4 papers every year. There's 3 shareholder resolutions, which I'll let you read if you pause the video. And there's also the important declaration of dividends that you need to put into it annually. If you ever get audited, the CRA will assume that you paid yourself only salary if you don't have a declaration of dividends paper in your binder, and then you'll end up owing taxes. So this is very important. Let's draw a picture of how my investment accounts look in relation to my corporation. We'll start out with me, and then I have a TFSA, an RSP, and a non-registered cash account. The corporation itself has clients which have nothing to do with me personally. They pay the corporation, and since it is active income, making money via whatever the corporation's business is, the money that comes in from the clients is taxed at a 9% small private business active income rate. And that's all the tax that the corporation will pay on that income as long as the money stays in the corporation. This is a great advantage from a tax point of view. The corporation has a trading account, non-registered only, unfortunately, since it's not a human. And this account becomes the piggy bank for you. It's sort of like an RSP, but in the corporation. The corporation pays you, the human, salary and or dividends. Dividends save you on taxes, as you can see from the column in which they get taxed, because they get preferentially taxed in your hands. But you do not build RSP room when you're paying yourself dividends. Now, this is okay, but you also cannot pay yourself CPP, which is also okay because it would be twice as expensive anyways, since you're paying both sides of the CPP, which I'll talk about in a second. If your corporation pays you via salary, you get taxed higher than the dividends in the bad column. Even though the salary is a tax write-off for the corporation, it still nets out worse than if you were using the dividends. But then you can pay yourself CPP and you can build RSP room if that's what you're looking for. You can, of course, do a combination of dividends and salary as well. You're not confined to only one or the other. I should mention that I am personally staying away from RSP purchases because I have the corporation for work. And to buy RSPs, I'd have to bring the money into my personal account, and then I'd get a tax discount from the RSP equal to exactly the amount of the extra tax that I had to pay to get the money for the RSPs in the first place. As I mentioned, you need to pay yourself salary to build up the RSP room as well. But if you have room already, you could still get the money to your personal tax account a bit more tax efficiently via dividends. My accountant and I had a chat about the Canada Pension Plan and decided to stop paying into it. Since I'm incorporated, my corporation as the employer would pay half, and then I would have to pay the other half. So it would be twice as expensive compared to being a permanent employee with another employer. Plus, my corporation would have to pay me salary instead of dividends, so I would have to pay higher taxes there as well. Since the CPP is a forced savings vehicle and I am a good saver on my own, I haven't been paying into it for several years. I'm not expecting to get any CPP in my 60s or just get a few pennies. On the other hand, you may want to keep the CPP going because it has a roughly 4% return on the money that you're putting in, depending on when you take it and, of course, how long you live. And you may want to keep it going, especially if you've been paying into it for a while. There should not be a big issue getting a mortgage if you're self-employed and incorporated, but you may have to give the bank 2 to 3 years worth of the corporate tax returns. So that concludes my dissertation on private corporations. I am incorporated in British Columbia. It has been a decent experience as far as the taxes go, but my accountant is definitely charging me quite a bit to do the tax returns. So if you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.